Assalamualaikum warahmatullahi wabarakatuh. Second set of videos, still on partnership account, but this time I'm gonna look at Aiman, Izka, and Marsha question. This is part one of the video, still in the partnership accounts with changes topic. So go get your book, turn to page 38. If you don't have the book with you, press the pause button. Refer to the Aiman, Izka, and Marsha question. So today we're gonna do something different. We're gonna learn while listening to some music.
They say, oh my God, I see the way you shine.
Nope, we're not gonna do that. So we're gonna look at what's going on. The business of Aiman, Izka, and Marsha. The accounting period is from 1st July 2014 until 30th June 2015. And then something happened on 30th April. They had a fight. So Aiman decided to leave the business. Okay. This one is a bit different because it divides your accounting period into two parts. The part one is 10 months and the second part is 2 months. The first part we call it as a pre-period and the second part we call it as a post-period. But as usual, when someone leaves the business, you need to calculate goodwill and revaluation and absorb into the old partners. And then Aiman can leave. So in comes Husna. So those who wants to continue and those who wants to join, you need to contribute their part of the goodwill. Okay, so the pre-period is between Aiman, Iska, and Marsha with the business, and the post-period is between Iska, Marsha, and Husna. So let's continue. As usual, you're going to calculate the goodwill. So this question also uses the super profit technique. So the average net profit given in the question minus the return on capital employed 10% times 156,000 also in the question, so you get 15,600 and minus with the remuneration and times with 3 years purchase, so you're going to get a goodwill of 43,200. Quickly, let's prepare the goodwill account. So we're going to check who contributed the goodwill. The first place, Aiman, Iska, and Marsha, of course, all partners. We're going to use the profit sharing ratio. Okay, so we're going to have a balance of 43,200 goodwill. So this one needs to be contributed by the new partners Iska, Marsha, and Husna according to their new profit sharing ratio. So they share the profit equally. So there are three partners, so 1/3 each. So remember the goodwill accounts needs to be zero. We are not maintaining any value in the goodwill account. So let's continue with. Oh, before I forget, this one will go to your capital statement later. So let's continue with the revaluation account. So let's see what items involved. The assets involved are freehold land and building, inventories, office equipment, and motor vehicles. So two of them increases and two of them decrease. So the items that increase, you need to credit them, and the item that decrease, you need to debit them. Revaluation accounts is a revenue account. So any increase on the credit side, any decrease on the debit side. There's one new thing, professional charges. This is something that you need to pay when you do revaluation on your asset. So this is serves as an expenses. So it reduce your revaluation revenue, so gonna put it on the debit side. So what's left is 30,570 revaluation profit. Okay, now remember the revaluation profit can also be negative, just divide it accordingly when you get the amount. So this one is a profit of 30,570. Gonna divide between Aiman, Iska, and Marsha according to their profit sharing ratio, 3/6, 2/6. And hold on, tak ada lagi. Aiman, Iska, and Marsha 2, 3, 2, 1. So remember the balance also needs to be 0. Okay, that's all for for part 1 of the video, to be continued. See you in part 2 of the video. Assalamualaikum warahmatullahi wabarakatuh.